All right, picture this. You've finally taken the plunge. You've started your very own retail business right here in Indiana. You go to buy your first massive batch of wholesale inventory to stock those shelves. You get to the checkout, and boom, the supplier hits you with a 7% sales tax on the entire order. Ouch, right? That literally eats directly into your profit margins before you've even made a single sale. Well, welcome to this explainer. Today, we are going to completely demystify Indiana's resale certificate process so you can keep that money exactly where it belongs, in your business.
You know that scenario? It's an incredibly common and, let me tell you, painful trap for new business owners. Paying sales tax on wholesale inventory that's just meant for resale, that is a massive drain on your cash flow. And in the retail world, cash flow is absolutely everything. But here's the great news. It is completely legally avoidable as long as you have the right state documentation in place.
So let's dive into this. Indiana has a flat state sales tax rate of 7%. Now, the silver lining here is that there are no local or county add-on taxes to worry about, so it's a straightforward 7% everywhere you go in the state. But wow, does that 7% add up fast? Think about it. If you're spending $10,000 on wholesale goods, that's $700 lost to taxes completely unnecessarily. Securing your resale documentation is literally your direct shield against this margin-eating tax.
Here's our roadmap for today. First, the resale certificate secret. 2. Who is eligible? 3. Applying for your RMIC. 4. Using exemption form ST-105. 5. Maintenance and compliance. And finally, 6. Benefits and action.
Moving right along to Section 1, the resale certificate secret, unlocking the two-part system.
Now, what's really interesting here is that in Indiana, a quote-unquote resale certificate isn't actually just one single magical piece of paper that the state hands you. It is a two-part system. First up, you have the RRMC. That stands for Registered Retail Merchant Certificate. This is your entity-level registration. Basically, it gives your business the legal authority to operate and collect tax. Second, you have Form ST-105. This is the actual transaction-level piece of paper that you fill out and physically hand to your supplier to buy items tax-free. You simply cannot use the form without first having the certificate. Make sense? Okay, Section 2. Who is eligible? Understanding nexus. So to be eligible to register, you need what the state calls nexus. Let's translate that tax speak into plain English, shall we? Nexus really just means your business has a strong enough connection to the state of Indiana. Now, you clearly have physical nexus if you have a storefront, a warehouse, employees, or inventory physically sitting in the state. But even if you're an out-of-state seller, you can trigger what's called economic nexus. In Indiana, if your remote business hits $100,000 in gross revenue from Indiana customers in the current or previous calendar year, you officially have nexus. And yep, you need an RMC. Let's move to Section 3, applying for your RRMC, the step-by-step guide. All right, the absolute fastest and most highly recommended way to get your RMMC is completely online through the state's EINBiz portal. Here's how it goes. Step 1, gather your business info. Step 2, create an account on EINBiz. Step 3, start the business tax application, which is known as Form BT1, and select the sales tax option. And Step 4, pay the fee. It's a $25 statutory fee per location plus a $1 online convenience fee, bringing it to $26 total. Now, you could use paper forms, but honestly, those take weeks. The online portal gets you your certificate in just a couple of business days. Just a quick pro tip on the application process. Having your federal employer identification number, your FIN, and your business structure details ready before you sit down to fill out Form BT1, that is going to save you massive headaches. Once your application is processed, the Department of Revenue issues you a 10-digit Indiana Taxpayer Identification Number, or TID, plus a 3-digit location code. Keep this 13-digit combination very safe. It is essentially your golden ticket for the next step. Which brings us to Section 4, using Exemption Form ST-105, executing the transaction. Here is exactly what you need to fill out on Form ST-105 to ensure your transaction is completely valid and audit-ready. There are 5 mandatory sections, and listen, if you leave any of these blank, the seller legally has to charge you tax. Section 1 is you, the purchaser, where you input that 10-digit TID we just talked about. Section 2 is your vendor's info. Section 3 is the scope, so is this a single purchase or a blanket one? Section 4 is the statutory reason. You'll just check the box for resale. And finally, Section 5 is your signature, and this is explicitly signed under penalty of perjury. So definitely no fibbing on this form, guys. Let's spend just a second on the blanket exemption option from Section 3, because honestly, it is a massive time saver. Let's say you run a custom apparel shop and you buy bulk blank t-shirts from the exact same supplier every single week. Instead of handing them a brand new ST-105 every Tuesday, you just check blanket exemption on the very first one. That single form covers all your recurring identical purchases from that specific supplier going forward. Just remember, if you suddenly start buying totally different items from them, you will likely need to issue a new form.
All right, on to Section 5, Maintenance and Compliance, Staying Audit Ready. Here's the compliance life cycle, and this actually highlights an incredibly generous benefit from the state of Indiana. So you register at 1-0. Fast forward to about 30 days before your 2-year mark, and the state runs an auto-renewal check. If you filed all your returns and paid any taxes owed, Indiana automatically renews your RMMC for free for another 2 years. There is absolutely no renewal fee. Also, as a general best practice, make sure you keep all those SD-105 certificates you handed out on file for at least 3 to 6 years, just in case you ever face an audit.
Now, to maintain that critical good standing for your free renewal, you're going to manage your tax filings using the state's in-time portal. And here is a vital rule. Even if you had 0 sales in a given period, you must file a 0 return. If you just ignore the filing deadline, the state basically assumes you owe them money. Unresolved liabilities will get your RMRC revoked. And it actually gets worse. Indiana publishes a public online list of merchants with expired certificates and delinquent taxes. You definitely do not want your business ending up on that public wall of shame. Finally, Section 6, Benefits and Action, Why This Matters.
So the crucial point here is that obtaining your RRMC and properly issuing Form ST-105 acts as an immediate and guaranteed 7% margin protection on all of your wholesale inventory. By completely avoiding that tax on the front end, your wholesale cost stays as low as legally possible. That 7% stays right in your pocket, giving you the breathing room to price your items competitively, cover your overhead, and actually make a real profit when you finally sell those goods to the end consumer.
Let's distill this whole explainer into a concrete action plan for you. If you were buying goods to resell in Indiana and you haven't registered yet, your very next step is to go to the INBiz portal, file Form BT1, pay the $26, and secure your RMC. Once you receive your 10-digit TID number from the state, download Form ST-105, fill it out completely, and hand it to your wholesale vendors right before your next inventory purchase. It's that simple. And right before we wrap up today's explainer, I do need to share a quick but very important reminder. Please make sure to consult a legal or financial advisor for personalized advice, as state regulations and tax requirements can and do change. We absolutely love structuring and explaining these concepts for you, but we aren't your personal CPAs, and tax laws are always evolving. So I have to ask you, are you currently paying 7% too much on your wholesale inventory right now just because you accidentally skipped this step? Or maybe you've had a funny experience trying to explain how a blanket exemption works to a super stubborn supplier. Drop a comment below and share your story with us. Let's keep the learning going.